Ladies and gentlemen, thank you for standing by, and welcome to the Lucid Group third quarter 2024 earnings conference call. Please be advised that today's conference is being recorded. Welcome to Lucid Group's third quarter 2024 earnings call. Joining me today are Peter Rawlinson, our CEO and CTO, and Gog and Dingra, our interim CFO and principal accounting officer. Before handing the call over to Peter, let me remind you that some of the statements on this call include forward-looking statements under federal securities laws. These include, without limitation, statements regarding the future financial performance of the company, production and delivery volumes, financial and operating outlook and guidance, macroeconomic and industry trends, company initiatives, and other future events. These statements are based on predictions and expectations as of today, and actual events or results may differ due to a number of risks and uncertainties. We refer you to the cautionary language and the risk factors in our most recent filings with the SEC and the forward-looking statements on page 2 of our investor deck, available on the investor relations section of our website at ir.lucidmotors.com.
Hello, everyone, and welcome to Kilowatt, a podcast about electric vehicles, renewable energy, autonomous driving, and much, much more. My name is Bodie, and I am your host. And tonight, on November 15th, 2024, I am currently watching boxing, which is something I haven't done in a really long time. But Mike Tyson is fighting Jake Paul, and I would love it if Mike Tyson just destroyed Jake Paul's face. So I'm watching boxing. I used to love boxing in my 20s and in my 30s, right before I had kids. And then I got rid of cable and I stopped watching. So anyway, while I record this episode, I've got the match in the background. And right now, I'm watching a really good fight. And if you haven't seen it yet, I would highly encourage you to go watch the Serrano-Taylor fight. These ladies just are battling. I think it's the 8th round right now, and they are just going hard. It's a good fight. So if you like fighting, go to Netflix. And I didn't see the other fights before this because I was doing family stuff, but I would highly encourage you to go watch because, like I said, Taylor and Serrano, they are just, I don't even know how to say it without being crude. They are just fighting hard. Let's just put it that way. All right. Let's move past the fight. I'll give you updates if you want as we go through this. If you don't want any spoilers, then maybe don't listen. But yeah, so we are here to talk about Lucid's Q3 2024 earnings call. Lucid is like on the cusp of releasing their Lucid Gravity, which is a SUV. I think it's a 3-row SUV. Starting at $94,000, I think it is $94,900. We'll talk about that more in a little bit here. But this is a pretty good earnings call. I think we learned a little bit, and let's go ahead and dive into this. We're going to start off with Peter Rawlinson's opening remarks. And I should say, just like always, I cut this up so that it makes the most amount of sense for this show. If you want to go listen to the entire earnings call, you can do so. I'll put a link in the show notes, but it's ir.lucidmotors.com.
Thank you, everyone, for joining us on our third quarter 2024 earnings call. Now, before I get to the third quarter results, I'd like to start by thanking all our employees, suppliers, and partners for their support and hard work. I'd like also to thank our investors and the PIF for their continuous support and partnership. Last month, we raised approximately $1.75 billion through a public offering of common stock of approximately $719 million and a corresponding pro rata investment by an affiliate of the Public Investment Fund of approximately $1.026 billion. This additional capital gives us sufficient financial runway into the ramp of Lucid Gravity and indeed well into 2026. Now, the raise is consistent with our strategy. We've said that we'd continue to be opportunistic based upon the market, and we delivered this with strong support from the PIF as well as other institutional investors. So, turning to third quarter results, we had another quarter of record deliveries with the momentum in the first half of the year continuing into the third quarter. We delivered 2,781 vehicles, up approximately 91% year over year, and up 16% sequentially, outperforming what is typically a seasonally softer period for the industry. In September, in the US market, the Lucid Air not only outsold many of the largest and most storied brands in the industry within our competitive set of electric vehicles, but we also outsold many of the competitive set in the gas market as well. So I think our momentum is quite notable. And I believe a part of this is due to Lucid's growing brand awareness, which is reaching an all-time high in the third quarter since we started tracking this metric. Whilst I believe we still have much more opportunity to grow our brand awareness, we're still making very good progress. And I think you can see this in our delivery numbers. The number of vehicles on the road continues to grow, and I'd like to thank our loyal customers who are our biggest advocates. You are a key part of our success, and I'd like to extend my sincere gratitude. Turning to production, we produced 1,805 vehicles in the third quarter and are on track to produce approximately 9,000 vehicles for the full year 2024. I'm delighted with the progress we've made with vehicle inventory and will continue to manage this judiciously. As that said, I would expect an increase in production in the fourth quarter.
All right. So, a couple things here. First of all, the Saudi investment fund gave another $1 billion to Lucid. According to Barron's, the PIF owns approximately 60% of Lucid Motors in total. Now, this wasn't a direct investment from the Saudi investment fund. That was that came from an affiliate, but I think it all kind of funnels into the same pot eventually. So 60%, which is, that's a pretty significant amount. Deliveries are up for Lucid, which is great, but 2,781 vehicles delivered is not a great number. It's great for Lucid, but for most car companies, that's not a great number. They produced 1,805 vehicles, and they're expected to produce over 9,000 vehicles for 2024. So, yeah, I hope that this happens for sure. One of the things that he talked about that I didn't play was their cost-cutting measures at the factory. They actually will talk about this at the end of the earnings call, so I didn't think it was worth adding that little bit that he talked about. But the spoiler alert is there's a lot of increased automation at their Casa Grande factory, so that's good. Before we move into Peter's further opening remarks, I will say the fight between Serrano and Taylor was a good one. It went all the way to the end, and I did not like the decision. I do not think the person who won should have won. I'm not going to ruin it for you, but both fighters knocked it out of the park. But unfortunately, I think the wrong fighter won. All right, let's go ahead and continue with his opening remarks.
Turning to software, on our last quarter's earnings call, I promised we would release over-the-air software updates, substantively enhancing our advanced driver assistance system, or ADAS. And we delivered with a number of over-the-air updates in the third quarter, including our Lucid UX 2.4 package, which introduced many enhanced features such as lane change assist, active curve speed control, and extended stop and go. UX 2.4 also introduced our new Lucid Assistant, our new in-cabin voice assistant, as well as user interface upgrades. And last week, we started deploying via an over-the-air software update, Lucid UX 2.5, which adds an innovative curb rash assist feature, warning the driver of the Lucid Air before a wheel scrapes the curb. We also upgraded the performance of our audio systems for improved response and performance. Now, these are further examples of how we continue to bring tremendous value to the vehicle long after a customer's purchase. The software team is invigorated, and we have much more in store. In the very near future, we're targeting the release of an over-the-air software update that will enable hands-free highway assist. Watch this space. I believe the roadmap is robust, and I think customers are really going to love it. I'm also delighted to announce that Lucid Air earned the highest possible overall safety rating of 5 stars from the National Highway Traffic Safety Administration's New Car Assessment Program. This is the government's premier customer information program for evaluating vehicle safety. The Lucid Air Pure, Touring, Grand Touring, and Sapphire received the maximum 5-star scores for overall safety in frontal crash, side crash, and rollover testing. This follows the highest possible European rating of 5 stars for the Lucid Air in the rigorous Euro NCAP crash testing process. We worked assiduously on making the most advanced electric vehicle enabled by a clean sheet design and engineering with the goal of securing the highest possible safety ratings. Safety has been a top priority from the outset at Lucid, and achieving 5 stars in NHTSA's new car assessment program should give owners even more confidence in the Lucid Air. So we have much to celebrate this quarter and thus far throughout the year. I think our progress through the first 3 quarters of the year is a testament to our tremendous progress. Turning to the Lucid Gravity, I'm delighted to announce that we opened orders and pricing today. Our configurator is now live. Customers are telling us they are keen to get behind the wheel of a Lucid Gravity, and we know there's an incredible amount of interest. For example, we held Lucid Gravity Roadshow events in our studios across the country. And in those studios, we saw foot traffic increase more than 70% versus the prior 30 days. I think certainly the Lucid Gravity is having a positive effect on the Lucid brand, and is also helping to raise awareness of the Lucid Air. The scheduled start of production is just a number of weeks away, and I think very soon we'll be in a position to announce when we might be able to make the very first deliveries.
In terms of software update, I don't know that this is like big news. We've talked about some of that stuff in the past. So not much to say there. High marks for safety. So congrats to the Lucid team for that. That's a good thing. We definitely want to be driving around in vehicles that are safe. And then the Lucid Gravity, again, this car starts at $94,900. Now, that's not going to be the actual starting price of the vehicle once they get all the trims out. That's just going to be the price, or I should say the initial price of the Gravity when it first comes out. Eventually they'll have, some more affordable versions of the Gravity, but it's going to start off right at $94,900. And the configurator, there's not a lot that you can do. You can change colors and, some wheel options and things like that. But there's not a lot you can do in the configurator. It's basically 94,000 plus. But like I said, more affordable models after launch. I'm really looking forward to seeing one of these bad chickens in real life. I haven't seen one yet. And, I've spent a little bit of time in and around the Casa Grande lately. So haven't seen one driving around yet. So they must still have it under wraps. All right, let's move on to our retail investor questions, which is really just one question.
Do you plan to offer a more affordable vehicle? If so, what's the timeline?
Oh man, yeah. Well, maybe we haven't made this clear enough because this has been on the vision, our mission, our schedule for many years now. We're not here to be just a niche player. This is This is so misunderstood. Lucid exists to have a meaningful impact upon the planet. And to do that, we need scale. And to get that scale, we need to bring our price down. So our mid-size vehicle is scheduled for start production late 26. The work is well underway. And in our technology and manufacturing day presentation we showed in September, we already actually gave a sneak peek of one version of this mid-size vehicle. We address the total. We estimate the total addressable market to be about 30 times than our market last year. This is our product, which we're targeting about $48,000 to $50,000. The vision is I'd love to sell 1 million of these a year. The opportunity is vast.
This was actually announced a couple of months ago, and I think even they talked about it at their last earnings call. But I left it in just in case anybody was not aware that Lucid was planning on doing a more affordable version. They're also planning on making it like off-road capable, or at least a version that's off-road capable, and maybe competing a little bit more with what Rivian's trying to do, which I'm not sure is a good idea or a bad idea. My general feeling is it's a bad idea, but it might be a good idea. I don't know. Maybe they're trying to compete with the Scout brand. I honestly don't know. But they're going to do what they're going to do. So hopefully it works out for them. All right, let's move into our analyst questions.
And then maybe I could ask a second question, and I apologize for skipping over the Gravity to some degree and trying to get to the mid-size. But when you think about the commonality between the Air, the Gravity, and then whatever the name will be on the mid-size, what are the reuse potential there? And as you think about sort of in general in the organization, how much of your resources from a human capital perspective and actual capital, dollar capital perspective, is now being focused on that mid-size?
So I think if you look at some of our core technology, all our expertise in battery management system, control logic, traction control, stability control, motor control, all of that is directly transferable. If you look at our infotainment technology suite, ADAS, a lot of that is directly transferable. A lot of our core software expertise, absolutely. But in terms of motor technology, we're taking the very best learning from our Zeus program and transferring that into Atlas. Atlas is well on its way, actually. Atlas is all about an absolute ultra affordable version of Zeus. And Zeus was affordable because it enabled cost down in batteries. So we're going to take next generation battery tech and a completely new very advanced architectural look at midsize. And that is going to be really aimed at reducing the bill of materials cost for high volume. So we will use different high volume processes and very much focus upon the factory as the center of the cost down driver. This is a very different animal. We've proven we've got the best vehicle in, the technological tour de force in Air and Gravity. Midsize is going to be a really different approach. It's going to be cost conscious. Its focus is the machine that builds the machine.
What an Elon Musk thing to say. The machine that builds the machine. That's what Elon's been saying that about factories since they built Gigafactory in Nevada. Maybe even before that, but that's when I remember him saying it. This is not a great answer, but I will tell you that this answer sets up another question that's going to actually be at the end of the episode. So I think that, based on his answer, I don't have confidence that Lucid has the mid-size platform completely figured out yet. It's not to say that they won't, and it's not to say that it won't be good, because Peter Rawlinson is a heck of a marketer, but he's also a really good engineer. It's just to say, of course they want to make it cheaper. It's a cheaper vehicle. Of course they want to make it great. There's a lot of great vehicles in that price range. From Hyundai, Kia, Genesis, Tesla, Rivian will be in that price range eventually. So, of course, they want this to be affordable because they want to make money. Like, that makes total sense to me. And like I said earlier, their cost savings measures are coming from automation, or at least they hope it is anyway. We'll have to see. But based on this answer, and maybe he just doesn't want to answer, and that's entirely possible, and he's just, throwing out a word salad to confuse everybody. I don't feel like they have the mid-sized platform completely dialed in yet. They probably have an idea, they have a concept of a plan, but I don't know how where they're at in that design process. Are they pencils down? Probably not. Are they close? Probably not. Again, I just want to reiterate that is based on that answer that he just gave and listening to the rest of the earnings call and all the other earnings calls that we've heard to this point. Let's move into our next analyst question.
Andres Shepard with Cantor Fitzgerald. Please go ahead.
Hey, everyone. Good evening. Congratulations on the quarter, and thanks so much for taking our questions.
Hi, thanks.
Hey, Peter, I'm wondering if, I know it might be a bit early, but curious to see if you have a sense or an idea, or what kind of unit mix are you anticipating for next year with the Gravity ramping up in terms of the air and the Gravity? Just curious, what is the better way to think about that for next year? Thank you.
So what we've done, we've started with a high-end product first, the Lucid Gravity Grand Touring. We think there is a huge latent demand for that. We've announced that later in 25, at an appropriate moment in time, we'll bring out the Lucid Gravity Touring, which starts at the 79,900. The Grand Touring starting at 94,900, which I think is a cracking price point for the product. Over 440 miles of range, true 7-seater, high performance, 828 horsepower, a machine. It really is a flying machine. So I think there's huge latent demand for the Grand Touring. I've stated before that we're not manufacturing constrained with our build for Air. We've been market constrained. I anticipate that we're going to be manufacturing constrained next year in the build-up of Gravity. We need to get the quality right and take a judicious and very prudent approach to meeting customer expectations with the quality as we ramp up. I anticipate we will be a manufacturing ramp-up quality mindset constrained in that ramp-up, not constrained by market demand. And then we'll transition to the Touring at some stage late next year when we deem appropriate.
Okay, so this is hard because a lot of this is speculation, right? But I don't think 2025 is going to be a great year for Lucid and the Gravity. I think that they are going to have to wait till 2026 and 2027 to really see how that vehicle sells. I think that's the only fair way to judge it, because they're going to release a few in the first quarter because they have to ramp up production. They have to make sure that they have all of their suppliers in order. They have to make sure they have distribution in order. There's just a bunch of things that they have to do in order to sell this vehicle. Actually, from raw materials to out the door in delivery in customers' hands, there's just a lot of things that needs to happen. And none of these car companies that has introduced a new product, or at least none of the new EV companies that have done this, have been able to move into production without a lot of problems. So I don't think 2025 is going to be a good bellwether on whether or not the Gravity is going to sell well or not. Because, Lucid, let's say they have 50,000, and I don't know how many they have, but let's say they have 50,000 reservations for the Gravity. And let's say they're only able to build 6,000 vehicles. Well, the news headline isn't going to be that Lucid has 50,000 reservations. It's that they only delivered 6,000 vehicles in 2025. Lucid currently has plenty of money, so let's let them cook. Let's let them figure things out And if their numbers are still low in 2026 and 2027, then I think that's really telling for the company and basically where they're at in terms of manufacturing or demand. They say they don't have a demand problem with the Lucid Gravity, or they won't have a demand problem, but it still starts at $94,900. Still not a cheap vehicle. There's only so many people who can afford that vehicle. So we'll see. I do want to see Lucid succeed, so I hope that it does well, but that is a concern that I have. What are your thoughts? You can email me, Bodie, BODIE, at 918digital.com. Let's listen to our next clip.
Just kind of a high level, when you think about your capital needs and timing of capital, like you did the recent capital raise, and I was just curious on kind of how you chose kind of when to do it versus need, because it felt like you had a longer runway, and I know it creates confidence to have the cash.
Yeah.
Just sort of thinking about how you balance that out.
Well, thank you, Francis. I'm actually glad you asked me that, Stephen. Actually, so to recap, we recently raised nearly $1.75 billion, and that secures the future of the company, and it secures our financial runway well into 2026, and that takes us way past not just the start of production of Gravity, but well through its ramp up phase. And that means that this year in 2024. We've raised well over $4 billion in what's been a brutal market where Wall Street's really fallen out of love with the EVs. And it just shows just how we can buck the trend, because there's been a cognizance of the value of our tech, both commercially and as a key product differentiator. Now, this should have come as no surprise whatsoever, because before we had a financial runway into Q4 2025. You never want to have a runway less than a year, so it makes perfect sense. And I've always said I would want to be opportunistic and raise capital when the moment is right, and not just run things right to the last minute. Why would I run things to the last minute? What we did, I think, was a very prudent move. We took the opportunity. Why would I want to run it into the holiday period? I don't want to be running less than a year's financial runway. So I think this has been misinterpreted. I think it's super positive news for the company. We've raised capital when others have not been able to. It's had a huge step forward in our securing our future. And there's another litmus here, which again should be recognized. The PIF went pro rata on that 1.75 billion. So you've got two factors. You've got independent third-party validation of our value, so we're not just dependent upon the PIF, but the PIF go and show shoulder-to-shoulder commitment to Lucid and their support of us, again, because we're absolutely in this together long-term, but a long-term partnership which transcends a mere financial arrangement, because we are cornerstone of the Saudi Arabia's bold vision for 2030 to transition to a sustainable economy. And it's Lucid's technology which is going to enable that.
Ooh, in answer to the question of why raise capital now, I think it's a good time for them to raise capital. I don't know that Wall Street has fallen out of love with EV makers or EV manufacturers. I don't know that that part is true. Tesla's stock's doing just fine, and it was doing just fine when this earnings call was recorded. Over half of their latest raise, their latest investment, was the affiliate from the PIF, the public wealth fund or investment fund, excuse me. So, yeah, I mean, if you can raise the money from a partner that has a 60% stake in the company, you should. We don't know what the next, couple of years is going to bring. We have a presidential change here in the United States with possible changes in regulations, EV regulations and incentives. So, don't know what that's going to look like. So I think from a pragmatic standpoint, this was a good choice and a good decision. Now, back to the Mike Tyson-Jake Paul fight. Jake Paul's entering the ring in a convertible pickup truck, and I hate him so much. Let's move on to our next clip. And this should be our final clip.
I just wondered whether you could perhaps place me on a timeline. How far are we away from all of the cost savings being realized for things like freight and cost savings, and where you need to take, I guess, some more difficult actions to actually remove cost from the air. And then I have one for Peter, if that's okay.
That's a great question. Our journey is recurring. We are taking consistent efforts. In fact, we have identified our targets, where we want to be end of this year, where we want to be end of next year, where we want to be middle of next year, and even beyond that. So we are going to make significant efforts on cost reductions. In parallel, what we're doing is technology is helping us bring the cost down, like the battery cost, like the drive unit. But what you see in terms of targets, and when we come to scale, it's significantly going to turn around it. Because what we are right now doing with targets, bringing the variable cost significantly down. And with Gravity coming, it is going to take us to the next level for scale, where all our fixed costs per vehicle will significantly come down. So you'll see where we are on the gross margin, negative 106%. It was negative 241% last year. So if you look at that improvement and where we'll be next year, when we provide some directional color in the Q4 earnings about 25, we are on the right track in that journey.
I'm going to break in here for just a second because there's still more to this question. He had a follow-up to Peter. But Lucid announced their car in 2016. They had been working on it longer than 2016, but that's when they announced it and showed it off to everybody. And it was a big hit. And I liked it a lot when it came out. They started selling their first vehicle or delivering their first vehicle in 2021. So now we are in 2024, and they're still trying to remove inefficiencies out of their manufacturing and supply chain system. And I'm sure, delivery and all that other stuff. So they're still trying to pull those unneeded expenses out of the cost of building their vehicles. And, they're just losing money on these vehicles. It seems like, and I don't think that Lucid has stupid people working for it by any stretch of the imagination, but it seems like by now, or at least in 2025, we'll give them 4 years, they should have, or at least come close to turning a profit, like breaking even, turning a profit, or maybe just losing a little bit of money. The one thing that I think is maybe it's a benefit and a hindrance is the Saudi Public Investment Fund, because Lucid has this piggy bank that they can draw from. And it's possible because they have this safety net that maybe they haven't been as aggressive as they could have been in terms of removing these unneeded costs from their, whether it's their supply chain, manufacturing, like I said, all the things that I mentioned. I would expect at this point in time for Lucid to be closer to profitability than they are. It's not to say that they won't eventually get there, but I just wonder whether or not the Saudi Wealth Fund was a benefit. I mean, obviously it's a benefit. They're still getting money from it. But because they're able to get money from it from what seems like whenever they want to, has that left Lucid sitting on its heels a little bit and not being more proactive at removing those unneeded costs? All right, let's move on to our next clip.
Peter, I wondered if you could explain what you mean when you say that the Gravity uses a different platform to Air. If I'm correct, both vehicles have nearly identical wheelbases, and Leap is a modular platform, which would allow for differentiation via a top hat design. So I just want to kind of understand a little bit what exactly you mean by Gravity uses a different platform.
It's a Leap is a modular platform where you could do a CUV, you could have done a minivan, you could have done a coupe, you could have done lots of things like that where you're fairly compromised as a product. If you look at an example of that is Tesla Model X versus Model S. X isn't really a proper SUV, it's more CUV-like because it's based upon S platform. We took the decision to get much more product differentiation to avoid a cannibalization of Air with Gravity. We wanted to really capture the 6 times TAM of a true SUV market. And that means more off-road capability. That means more wheel travel, larger wheel diameters, more suspension movement. So you need longer links, more durable suspension. So you're going to have heavier suspension arms and brakes and rated for off-road durability. So the thing endures a long life on rugged trails. And also we combined that with air suspension so we could adjust the ride height of the vehicle. The other thing is that with Air, we sculpted the battery pack around the occupants in order to create the most advanced package and the space concept, which achieved the 500 miles range, sculpted around the people. And that's great for a sedan, a CUV. But for a 3-row SUV, what you need is a really flat floor. So we could achieve that with the same battery technology, with the same modules, but we just moved 2 of them around from underneath the rear seat to under the front seat. And that makes a different shape battery, but we got 95% carryover content. But I tell you, it's transformative in regards to the product. You've got a true SUV and you've got a true sports sedan. And they're very, very different and very optimized. And we realized we couldn't really do that with a carryover. A carryover platform would kill us for product differentiation. And let me tell you, we've done that now. It's only a smidgen over 3 years from when we launched Air into the market. For a relatively young company, no one's ever done a second platform in 3 years. There is no precedent for the rate that my engineering team is operating at. And we really, through this year, kept Gravity on track admirably. To hit start of production late this year is an incredible achievement for the team, and I really applaud them all for doing it.
All right, I'm going to break in one more time because this is a longer clip. I'm sorry for misleading you. I think using a different platform for the Gravity is really smart. You know, they can still use a lot of the same technologies between the platforms. They can use the same battery chemistries and form factors for the battery, the management system for the batteries, the different types of motors, and they can still, share some of that same DNA. But a new platform gives them an opportunity to change the way they do manufacturing to the point where it's going to make manufacturing easier, or at least they could, because they're not handcuffing themselves to a legacy technology. Now, granted, the Lucid Air is only, 3 years old in terms of a platform, but it's still, and it's almost 4 years old. It's still a completely different type of car. So this makes a lot of sense to me for them to have the Lucid Gravity be its own platform. And now we move to our really, truly final clip.
Okay. How do you think this has impacted the cost? So I guess when I hear things like, that they're not actually just a different top hat, it scares me a little bit.
I know, but this is the problem. That there is a disproportionate value placed upon true platform sharing because you very rarely share the full platform. What happens is it's talked about the same platform, but it gets modified. Now, all the superstructure of an SUV is going to be different anyway. All the seats are going to be different. The driver controls are going to be different. The wheels are going to be different. The suspension's going to be different. The brakes are going to be different in any way. The weight is going to be different. So your crash structure and collapse mechanisms and the way you engineer those have to be different. So where the real value proposition and economy of scale goes in is in the software and the powertrain architecture and componentry. We've got inherently the same motors, state-of-the-art motors. There's a lot of value. The same inverter, the same motor control system, Wonderbox, all the battery modules. 95% of all that value and all the software is carryover. You're not going to be able to carry over the doors, the glass, the suspension, the seats, and the tailgate anyway. So it's just a tiny bit of it, a relatively small part of it is different to get all that product differentiation. If we didn't do that, you'd be saying, well, I don't think there's a new 6 times TAM. You'd be saying, well, this is a cannibalization situation. It's not differentiated enough. Maybe you got 2 times the TAM, not 6 times the TAM. This is a value proposition, bit more engineering, a bit more cost, huge market opportunity.
All right. So I already covered a lot of this, so I'm not going to belabor the point here. I didn't mention software, but that's another good point, is even though the platforms aren't the same, they can share a lot of the same software. So yeah, that makes a lot of sense. All right. That is it for me on this episode. I hope you all enjoyed it. Right now, we're in round 2 of 8 in the Paul Tyson fight. It looks like Jake Paul is trying to run away from Mike Tyson and create a little bit of space, and also maybe try and tire Mike out. However, when Mike feints, anytime he feints, Jake Paul gets a lot of distance. He's really respecting Mike Tyson's punches. And I think Mike in the first round did really well. Jake Paul does look a little more tired. He is moving quite a bit more in the ring, whereas Mike is a little bit more steady on his feet like he was when he was younger. Jake Paul's wrapping up a lot. Honestly, Jake Paul is an athlete and he is a very strong human being, and it is possible that he could win this for sure. He is like 28 years old, but I would love to see Mike win. Anyway, that's your Tyson Paul update. I hope you all have a wonderful day. And if you watch the fight, let me know what you thought. I'm going to go post this and watch the rest. So thank you everybody for listening, and I will talk to you on Tuesday.
Thank you everyone for joining. You may now disconnect.